Hey, what is going on? Welcome back to the channel. Today we're taking a look at Dent. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, if you haven't seen the previous couple of updates, I would recommend you check those out before watching this one because I'm not going to be repeating every single thing that I've covered before, like this cup and handle pattern, the targets out of that. So make sure you check out the previous like 2-3 videos so you get the idea of what we're looking at here for Dent. But it's going to be linked in the top right hand corner. There's going to be a playlist with all the Dent videos. Now, jumping into the daily chart, we are on TradingView. So we do have this ascending triangle playing out, and I just spotted this, and it kind of lines up perfectly. We do have these higher lows playing out, and we do get rejected constantly from this resistance, as you can see over here. And let's get a target for this zone. So you want to take a trend line from the bottom, from the top where it was created, and the triangle it is, and to the very bottom of the triangle. Then you take that trend line and place it where you think the breakout is going to happen, and that perfectly gives us a target to this yellow resistance zone that we're targeting. And this is going to be a very strong resistance zone. We might melt through it, right? But we don't know what's going to happen. And chances are we're going to get rejected from that zone. We're going to come back down to find support either on the 20 EMA, or maybe we're going to come back all the way down here to the 0.0088 cents. So that's our target from the ascending triangle. On the larger, scale of things, as you can see, we're, failing to get through the 0.618, which is our golden ratio. And as you all know, once you break the golden ratio, that pretty much sets you up for a retracement towards the previous swing high, in this case, the previous all-time high. And, from there, we either get the double top pattern or we move on to our next targets, which is, 0.046 cents at the 1.272 fib. Then we have the 1.414 fib at 0.067 cents, and obviously the 1.618, which is the target after breaking this high over here at 11.5 cents, basically. So that's what we're looking at long term. We do want this pattern to play out. Obviously, we can end up breaking down from this pattern. And if we lost this horizontal support trend line that we have over here, I would look no further than the 0.382. Because you can see we're getting supported by the 0.5 over here, which is great. So yeah, look for the 0.382 if we have a deeper pullback, but I wouldn't imagine we would go that low. And I always, guys, say that you should have some buy orders ready at the, at the 55 EMA. And that's exactly what you could have had here, and you're already in profit if you bought in at the 55 EMA, like up 4%. But these are good entry points, the 55 EMAs. And what's going to happen right now for most of the projects is the EMAs are going to come closer together. Some may get a bearish cross, that is possible, but I don't think that would be for a very long time. The EMAs would come together, the space in between them would get reduced, and then you're going to have the move towards the upside, where we get overextended towards the end of the year, perhaps, into January as well. The EMAs get, this will be the distance in between the EMAs that you're going to be looking at. As you can see, this is going to be the distance. This right here is pretty healthy. This is not going to be healthy, and the price is going to be somewhere up here. And when you're going to start falling back down, you're going to fall through the EMAs like they're nothing. So yeah, that's what we're looking at. This is what happened in May. This is what we're looking for in December, January. Obviously, this could be the rollover into the bear market, but I don't think that's going to happen. Too many big players have bought in, too many whales are buying in and have already bought into this dip and through all the dips that we had throughout this year. So, Bitcoin is going places, and it's up to you where you take profits, but I'm going to start taking profits once we hit 100K. And I'll be slowly getting out of some of the altcoins that I'm in. But yeah, that's it for the price action on the daily chart. Jumping into the daily RSI. So I do have this yellow zone for you guys over here on the RSI at 47. So as you can see, that's exactly where we are dipping right now. So if we ended up coming back down there, I would imagine that we would hold this yellow zone as support. If not, you can look for the white trend line to hold, because this has been a multi-month support trend line as well. We've held it since July over here, another bounce here in September, and maybe we're looking for a bounce here in November. But, that would take us all the way down here, and I think the price would really, depreciate with this move on the RSI. But I don't, see that happening. What I do see is potentially we create a double bottom over here, right? Where the RSI comes back down even lower. But even right now, we're printing a higher low, which is great. It's great. So, nothing to worry about, in my opinion. Just buy the dip and get yourself some coffee, sit back, relax, watch a movie. Don't pay attention to the charts too much, because, you should take care of your mental health. So let's jump into Binance. Okay, so we are on the 4-hourly chart over here on Binance. We do have this yellow support trend line, as you can see, that we have had as resistance ever since September. But right now, we are wicking below it, and we do have a double bottom pattern playing out here with these 2 wicks over here. So we do have a target from that double bottom pattern at 0.00912 cents. And that pretty much takes us 009. Yeah, that pretty much takes us above this resistance zone that we have. So yeah, that's something you want to keep an eye on. We don't want to close below this yellow trend line. It's okay if we wick down below it, but really we want to hold it as support, because this was our previous resistance. And if you hold this as support, you're looking good for continuation. And one thing that I do want to show you as well is this horizontal resistance. So potentially we're forming something that looks like a falling wedge over here, but not really. This could be just a wedge, but not necessarily a falling wedge, in my opinion, over here. Think of this just as a horizontal resistance and a support trend line you want to keep. You start breaking the horizontal, you're flipping bullish, but right now this is the place to be buying. Obviously, we're getting the bearish cross on the 4-hourly chart, so that would confirm a bit of a downtrend. If we take a look at the 200 EMA, yeah, we're below that as well. Yeah, we want to get above the 200 EMA, get above the 100 EMA. We may test the 100 EMA as resistance and again get rejected from there. But I do see, us consolidating and perhaps, dipping these couple of days. But like I said, great buying opportunities. You want to look for every opportunity to buy as low as possible on the 4-hourly chart. Stochastic, as you can see, oversold. RSI, coming in closer to the oversold. And the MACD, obviously, confirmation of the downtrend over here. You can see the bearish cross. So, perfect place to start dollar cost averaging. We're going to jump into the daily chart real quick to take a look at some of the oscillators. So daily chart, stochastic, pretty much in the oversold. RSI, we took a look at that. And on the RSI, as you can see, we had a bearish cross November 9th. So if you sold when you had this bearish cross and you waited a bit to get back into Dent, you could have made some nice gains, because in terms of coins, basically. So November 9th, let's see where that was. So there's November 9th. Okay. So yeah, you could have bought in 15% cheaper if you, reacted to that bearish cross appropriately and you sold. But, that's, a big risk, because the MACD is a lagging indicator. But overall, we're doing pretty good. We're in between the EMAs on the daily chart. Now jumping into the weekly chart, as you can see, we're holding the 20 EMA on the weekly, which is great. Towards the end of the year, this is what you're going to see on the weekly chart, right? This is what you're going to see, and this is where you want to be taking profits when the price candles are above the 20 EMA with this much distance in between them. Right now, this is very healthy at the minute. This is very healthy. We're holding the 20 EMA, doing very good. This is the time to be buying, guys. And once you get up over here, that's where you want to be selling. So yeah, that's pretty much it for this video, guys. Thank you for watching. If I missed out anything on the charts, please let me know down below in the comments. Check me out on Twitter. Check me out on the Discord and the Telegram chat. We do have both of those running. Great TA going on in the Discord server. If you have any requests, go in there and request technical analysis. And we do have a Patreon running as well. multiple tiers with multiple different benefits. And, think of it as a great way to support the channel, and think of it as a great way to get some exclusive and helpful content, first. So yeah, that's something that you potentially want to look at. But that's pretty much it. Thank you for watching. I'm gonna catch you in the next one. Goodbye and good night.